How to beat the stock market in 2019. In this video, I want to show you why it's super important to understand return on investment, risk, and volatility while choosing different stocks, and how to calculate the Sharpe ratio, one of the most important indexes to figure out which investments to make. It's also a very good indicator to show that Bitcoin and cryptocurrency is one of the best hedges to diversify your portfolio. I'm Kieran from CryptoBoost, and I'm really happy to have you here with me today. And if you like these types of videos, then I'd hope if you'd smash the subscribe button and click the notification bell for more videos like this. So let's get started. First of all, I'll try and simply explain how to calculate the Sharpe ratio and try to keep it simple and easy. So here we've got the explain like I'm 5 image of the formula, and the RP stands for portfolio return. That would be return on investment, and we subtract the return on investment from the risk-free rate of return. And the risk-free rate of return, you use the 3-month or longer treasury rate, and that's the standard. And here, this funny stand here is the volatility. So we divide the whole thing by volatility, or in other words, by standard deviation. So that is how you calculate the Sharpe ratio. And it's very important because when you're investing, what you want is a high as possible return on investment, and you want as low as possible risk. And you want to divide this by the standard deviation or the volatility. So quick chart. This is pretty interesting. It might be a little bit complicated, but in the end, I hope you understand what I'm going to try and show you with this chart, because this shows the optimal portfolio just looking at the cryptocurrency aspect. And here you've got this line on the x-axis. You've got the standard deviation, which is the volatility. You want to have this as low as possible. And on the left side, you've got the return on investment. And you want to keep the mean variance optimization. So that was what we've got on the left side, is performed on a test basket of 15 cryptocurrencies to create an optimal portfolio that lies on the efficient frontier. The efficient frontier is this line here. So you basically want to have your cryptocurrency portfolio on this line for the best possible return on investment with the lowest possible risk. Now, this article, I won't dive into it deeper because it's using data from 2017, but I just wanted to show how you can actually use the Sharpe ratio as soon as you calculate it from different cryptocurrency sites, where you can get the Sharpe ratio data, and you can actually plot it like this, and you can determine which cryptocurrencies will be the best for investing for a longer period of time. Now here there's another website where you've got it's treasury.gov, where you've got the T-bills risk-free rate of return, where you can use this data if you want to use maybe more than 3 months data, and that's where you can find it here. Now the volatility you can find on buybitcoinworldwide.com/volatility-index, and here I've got the 30-day estimate and the 60-day estimate. Now it's super important to know where you can find this information, and if you Google, you can probably find also different volatility indexes for whatever asset class you want to buy. But here there's a very nice graph which plots different risk-adjusted returns versus other assets. And here it's based on the 4-year data. So imagine you'd buy maybe a US stocks or Bitcoin or US real estate 4 years ago, and today you would look at the Sharpe ratio. We looked at the formula before, and you calculate that. However, you look at a 4-year period. And here's a nice example. So 2019 now, in August, we've got Bitcoin has a Sharpe ratio of 3.14. The US stocks has a 1.37, gold has 1.36, US real estate 1.15, oil 0.61, and bonds are in the negative with minus 0.12 and minus 0.55. So basically, the Sharpe ratio, the higher the number, the better it is, and the lower the number, the worse it is. And it's nice, you can look at the different periods in time. When was the best Sharpe ratio for the different asset classes? So, for example, in mid 2014, Bitcoin had a Sharpe ratio of 3.86, which is fantastic. But all in all, as you can see, Bitcoin had a very good Sharpe ratio. Now, very often when I talk to people about Bitcoin and different cryptocurrencies, they're going like, oh yeah, but it's super risky. It's not like a super risky investment. I prefer to invest in safer asset classes and so on. And I'm completely for diversifying a portfolio. However, I think it's very important that a portfolio has a certain percentage of higher risk assets. Now, the thing is, it shouldn't just be higher risk, but it should have higher Sharpe ratio, because you want the return on investment to outperform the risk, and that's how it's adjusted. Now, by having different cryptocurrencies on your that percentage of your portfolio that's allocated to cryptocurrencies, for having different maybe Bitcoin, Ethereum, and so on, it's very valuable. And that's one way how you can hedge against a financial crisis that should be happening in the next few years. So I think it's very important to have cryptocurrencies in your portfolio. I'd advise against having your portfolio 100% of only cryptocurrencies. I'd advocate for a smaller percentage of your portfolio to be in cryptocurrencies. But now that you hopefully understand a bit of what the Sharpe ratio is, I found a very interesting website. It's similar to CoinMarketCap or CoinCheckup, and that lists different cryptocurrencies, and you've got just an incredible amount of different data that you can filter, different columns that you can look at. You can log in and you can watch different cryptocurrencies. But I think one piece of information that I haven't found on any other tracking website, and that is that they calculate the Sharpe ratio for you. So I think this is very important information for also choosing which cryptocurrencies you want to invest in. And you can look at, for example, you can also look at the grading, but what I want to focus on now is the Sharpe ratio. And for example, here you've got the 30-day Sharpe ratio, you've got the 90-day Sharpe ratio, and you've got the 1-year Sharpe ratio. So if we filter for the highest Sharpe ratio at the moment, and that would be the 1-year Sharpe ratio, we've got maybe Chainlink has got a very high Sharpe ratio. You've got Binance Coin, Bitcoin, Litecoin, Tron, Tezos, and so on. However, what I would also do is make sure that you look at different things. For example, the large caps, you can select only large cap coins. You can also decide to choose only proof of work coins, or the trading volume, making sure that you've got maybe you want to look for smaller projects with maybe less than 5 million a day. I wouldn't advise for that, for longer term portfolios if you're building that. But that was it. Hope you found this interesting. I think the Sharpe ratio is a fantastic calculation that you should definitely use in your trading, making better long-term investment decisions. You can also use the Sharpe ratio for many different asset classes. And I think it's important to understand how you can calculate it. There are different calculators available online for figuring out how your portfolio is performing based on the Sharpe ratio. And the higher the Sharpe ratio, the better it is for your portfolio in the long-term run. So that was it for today. If you've got any questions, suggestions, or anything you want to ask me, then don't hesitate to leave it down in the comments below. I appreciate you taking your time to watching this video, and if you want more videos like that, I'd appreciate if you click the subscribe button and click the notification bell, and I'll see you on the next video. Peace.